Trump, tariffs, reshoring, onshoring. Everybody's talking about the problems in the economy. But what if I told you there's one real estate class that stands to benefit tremendously from all of this volatility? The great part is this asset class exists in every single city. There's an opportunity for you to invest and capture this wave for industrial outdoor storage. Ron from Rohde Law, and in this video, I'm going to talk about a single sub-asset class that hits all of the boxes. I'm going to talk about what is industrial outdoor storage, why it commands a premium in the market today, and how there could be an opportunity for you to cash in on this growing wave of real estate. First, let's define what is industrial outdoor storage. Now, if you follow this channel, welcome back. You know that I talk a lot about industrial real estate, but industrial outdoor storage, for people that don't know, is basically low coverage industrial. What we're talking about is less than 20% of the total areas. Let's start with an example of 1 acre. So 43,560 square feet. In order to qualify as low coverage, you would have to have a building about 8,000 square feet or less to qualify, and using the rest of the land as outdoor storage. This can be a gravel, this can be grass, or this could be a paved surface. It's typically going to be fully fenced. It's going to be secure with lighting and security cameras, but this type of yard space can store anything. This is compared to indoor storage, which is like your big box Amazon or distribution. And if they have any items that are stored in cardboard boxes, those cannot be stored outside and subject to the elements. We talked about what industrial outdoor storage is. Why is it beneficial? The main reason is that it eliminates the problems of traditional industrial. You have a big building, you have a flat roof, you have a lot of maintenance costs, insurance costs, and it is very expensive to transact and to execute a lease for these types of large buildings. Industrial outdoor storage solves that problem by placing rental income based on the outdoor storage. And that's what businesses need. If they're storing containers, they have trucks, they have trailers, they have raw materials, they have pre-finished telephone poles, whatever it is, they need to store that outside. It's cheaper and more efficient for all the parties involved, and that's exactly why industrial outdoor storage is going to continue to grow. How can this be a solution to America's needs? Well, everything going on in the world, we have been slowly onshoring and reshoring industrial manufacturing, final product assembly, QA, QC checks, and a lot of these acts have been trying to come back. However, there is an incredible amount of pushback from, we'll call the Amazon big box distribution. Nobody wants bomber warehouses right next to their residential neighborhood, and that's understandable. However, industrial outdoor storage offers a lot of the benefits of some of these small type locations without nearly as much negative pushback from the neighbors. And so if we're able to bring more of this manufacturing back to the United States, we're going to need more raw materials. We're going to need more partial assembly. We're going to need more welding. And this is exactly the type of use that could come back to the United States. If we're going to bring this back to the United States, we will need more industrial outdoor storage. Who is paying such an incredible premium? So let's take a look at a couple of examples. Scale matters. If you have a portfolio confined within one major metro, you're going to get a premium as new buyers want to expand into that market. Larger funds always write bigger checks. And I think that's really counterintuitive for some of us, is that a $5 million property by itself doesn't actually garner the same amount of interest, because the buyers that are coming from REITs, they're coming from large funds with $1 billion of equity. They have more pressure to deploy $50 million of equity in one purchase, and they're willing to compete for those properties versus doing 10 transactions of $5 million each. That's a lot more work. So a portfolio is very attractive if you can get that check size higher. Let's look at Peakstone Realty Trust. They bought $490 million worth of industrial outdoor storage. There was 51 properties involved in that portfolio, but this was a very attractive sale due to the quality and the location of these assets. Let's also look at Real Term's $277 million acquisition of 13 properties. This was a higher check size per property and a little bit smaller overall size. These large portfolios are trading in 5 and 6 caps. Again, when you have fewer buyers but more capital behind those buyers, they're going to accept a lower cap rate because A, their debt costs are cheaper, they possibly are not putting any leverage at all, but B, there are fewer needs for them. And the institutional buyers absolutely need these types of deals to fulfill their mandates. If you have that single $5 million iOS site, even with aggressive pricing, we are typically always looking for market debt buyers. And so you're limited to a cap rate at 6.25% or maybe 6.5%. And so instantly right there, your floor being at debt neutral from going to regional or super regional banks is not going to be the same as the large buyers. So where is the opportunity? One of the best pieces of advice, if you're looking to invest in this asset class, you can buy a fully tenanted existing portfolio and underwrite on the buy side. However, there's some cap rate arbitrage to be made if you're able to attach onto a larger portfolio. And what I mean is make it clear to other operators and other investors that own like-kind assets in that market or in an adjacent market. So if you own property in Houston and you have a seller in Dallas, that could be combined into a Texas portfolio. Talk to them, be friends, and you can include your property along with their sale. Both parties actually benefit from this. And I think in general, sellers are generally receptive to knowing what a competitive property is willing to trade for, and as well as it makes their portfolio larger and more attractive if they potentially have another seller that can contribute their properties into a portfolio sale. Now, you might not get final negotiation, but if I own a single $5 million property and I go to somebody else that owns 10 properties, and I very clearly say, if you allocate X dollars, call it $6 million to me, I will sell. That's generally a pretty simple negotiation. And as an individual owner, you're not going to have a lot of leverage, but you've made clear to them what your target and what your transaction price is. And so it's a fairly seamless conversation that you're willing to sell if it's part of a broader portfolio at your strike price. And so that's the opportunity for you. Look up industrial outdoor storage, and the next time you're driving around and you see an empty lot, that might be an opportunity. If you're still watching, thanks for tuning in. Check out my other videos on industrial outdoor storage. I'm also an investor, so in addition to being a real estate lawyer and a YouTuber, I own these industrial outdoor storage lots personally. I do videos on every single lot that I own. I'm doing videos on sales and how you can get started with very little money and just building your expertise.